Figures released by the Bank of England in their Money and Credit Statistics report yesterday showed that UK mortgage approvals reached a 13-year high, despite slipping slightly in December. Lenders approved 103,381 mortgages in December, some 2,000 fewer than November, and also less than a Reuters economist poll forecast of 105,000, but still significantly more than the February figure of 73,400. The recent strength in approvals has more than offset the weakness from earlier in the year. The UK housing market bounced back strongly following the countrywide lockdown in March 2020, buoyed by the stamp duty cuts due to expire at the end of March. Remortgages with a different lender fell slightly to 33,800 and are still around 35% lower than February 2020. As an annual comparison, remortgages dropped by approximately 130,000 from 2019-2020. Richard Pike, Sales and Marketing Director at Phoebus Software, commented, "When you consider that the housing market was effectively closed for 2 months in 2020, it is quite amazing to see that we ended the year with more approvals than overall in 2019. To say it has been a roller coaster is something of an understatement, given the effect the pandemic has had across the world. However, the overall effect on the housing market, despite the buoyant figures, is one that some will be feeling is not necessarily for the better. The increased demand has pushed prices up and first-time buyers are again feeling the brunt. With the average deposit needed now over £10,000 more than it was a year ago, according to research by Halifax, getting onto the property ladder is becoming harder again. The need for higher LTV lending is obvious, although, for lenders, the ongoing economic impact and the risk of rising unemployment is a concern for long-term affordability." David Ross, Managing Director of HomeTrack, added, "The market did experience its typical seasonal slowdown, but we are still seeing strong growth in mortgage applications as buyers rush to beat the stamp duty deadline. While demand is strong, average interest rates are ticking up, reflecting sustained demand for higher loan-to-value mortgages. These continued improvements, while welcome, are incremental and cautious. It remains to be seen whether these will be enough to weather the impact of COVID on the economy in the months to come." Thank you for watching. We are moneypeople.io. You can find us on Facebook, Twitter, YouTube and at www.moneypeople.io. We wish you great financial health.